Welcome, everyone, to Chapman on Air. On today's episode, we're going to be talking about life post Ian. My name is Mia, and I am the Director of Marketing here at Chapman Insurance Group. So, we know a lot of people have a lot of questions and confusion right now after the storm. We get it. We are here with you. We know a lot of people are running to their insurance agents to answer these questions. So, lucky for you, we have the best of the best here for you today. We're sitting here with Brian Chapman.
Hello.
So tell us a little bit about yourself,
Yes,
Brian.
so Brian Chapman, Chapman Insurance Group. We started an insurance agency here in Southwest Florida in 2009. Today we represent about 30,000 clients from Sarasota to Marco Island. And we've had a busy season here after Hurricane Ian came through. I think the biggest thing that I can tell about our company, that kind of the differentiator that just separates us from everyone else, is that family-friendly customer service that we provide. So answering questions of our clients, dealing with the carriers with claims right now, that's where a lot of our time is being spent. And you know, our clients are very, very grateful for that, guiding them through a lot of the claims and you know, the tragic situation that Ian presented to them in their lives.
Yeah, for sure. It's definitely unprecedented times.
It is.
Yeah, I often say this is our time to shine as an insurance company, for sure.
It's the moment.
Yeah, well, thank you for that, Brian. We have a lot of other industry experts joining us today. We're going to go to a quick break, and when we come back, we have Greg with Fire Service here. Today, it's a disaster cleanup, mitigation, and remediation company. We also have Matt Simmons of Maxwell, Hendry and Simmons. They are a real estate appraisal company. So we are looking forward to having them join us here in a little bit.
Awesome. Let's do it.
At M&M Multimedia, our driving purpose is helping businesses produce cutting-edge content to help increase their market share. How do we do this? By creating content that makes you learn, laugh, cry, or buy. If image is everything, we believe creating emotionally charged videos speaks more than 1,000 words, drawing your audience in and converting them to happy customers. Since we started serving Southwest Florida in 2009, we've strived to provide the best value in the market. Just bring us your idea or objective, then sit back and watch our team of multimedia producers bring it to life. From creative directors, constructional designers, and copywriters, you'll be in great hands from the beginning to the end. Making sure each step of the production process is given the attention to detail it needs to be effective. Our goal is to move the needle by giving you real-world solutions that includes identifying your target audiences, creating messages that speak to their needs, and ultimately converting them into loyal advocates to your brand. But we don't stop there. As we say, we embrace the multi in multimedia. Once your video is produced, we have the resources and partnerships to help promote it to your audience. Customers today want to engage with your business. M&M Multimedia will take it a step further and help you tie the knot. Learn more by visiting learnlaughcrybuy.com.
3.
All right. Well, as promised, we're back here with Matt Simmons of Maxwell, Hendry and Simmons, and Greg Frith with Fire Service. So tell us a little bit about yourself, what you do.
We are a full-service restoration company. We're a general contractor, but we specialize in the disaster cleanup world. So we do flood, fire, mold, crime scene cleanup, and we usually rebuild everything that we take down. We put it back up.
Okay, so you're not busy at all right now is what you're saying.
No, not busy at all.
Yeah.
It's a little different world we have right now.
Like vacation. What about you, Matt?
So Maxwell, Hendry and Simmons is a real estate appraisal and consulting firm here based in Fort Myers. We do commercial and residential valuation work. Most applicable to the conversation today is we do a lot of work for the FEMA 50% rule. So folks trying to figure out what their structure values are, that's a huge part of what we're doing, obviously, on a daily basis at the moment.
Yeah, well, we're going to just jump right into that. So I know you're talking about that a whole lot. Explain what the 50% rule is.
So the 50% rule is essentially a component of the National Flood Insurance Program, which intends to take non-conforming properties. And when we say non-conforming, we're talking about properties that have a base, that have an elevation below current base flood elevation. So they're, in effect, lower than they should be based on current standards. Those properties can only have essentially 50% of their structure value in work put into them in a situation after a storm where work needs to go in. So if a structure value is $300,000, it means you have $150,000 worth to work with in terms of putting the structure back together.
Okay.
Now, when we talk about that too, we're not talking about, you might have coverage for 250,000, right? But then your
Right.
home assessed value may be 500,000. So
Yeah, and that's part of where the dissonance is, the coverage amounts, as opposed to what the rule kind of ties you in on. Those things aren't necessarily locked together, and that's obviously part of what creates the confusion over how all of this works.
Sure. Yep.
Yeah. Lots of confusion. For
Yeah.
sure.
Now that's the 50% rule. Really, it was established as a good thing, right? If you think about it, because you have a non-conforming property that's built below the elevation requirement of today. So we want to improve properties above it. But what we're finding is that it could be a bad thing too, because now you've got a home, the majority of the home may be okay, the upper half, and then the bottom half, you got flood damage, but how much of that money can you spend on renovation and not cross that 50% threshold? So-
Completely. The rule, in many ways, yes, the storm validated the intent of the rule, but that doesn't make it any less difficult for people
Sure.
who are trying to put their homes and their lives back
Right.
together.
Yeah. I think when I look at the 50%, I think actually I know you know this because you've shared it with me, like how when you look at rebuilding a home or renovating the home, how far back do they typically look on that 50%? So let's say 2 years ago I did a nice renovation to my house. Is that gonna be a problem today if now I just received a bunch of flood water?
Yeah, so that's a great question, and that's actually an area where we've got a lot of good news here in Lee County. Lee County revised their ordinance relative to the 50% rule a week ago today, because there was this 5-year requirement where for a period of 5 years, work that was put into the property was kind of counted on a cumulative basis.
Just adding up.
And so you were drawing down, in essence, on how much you had from your 50% side of the equation. So a lot of folks have found out over the past month that work that was done even prior to their ownership, that remodeled house that they
crazy.
bought that they loved 2 years ago, it was because 3 years ago somebody did a lot of work to it, put a ton of money in, and now as they're trying to put things back
Right.
together, there's no money left to work with. So the good news that comes from that, though, is Lee County revised their ordinance. There had been a 5-year cumulative look-back period, and that changed. It's now permit by permit. And so there's no holding period, essentially, where you accrue cumulative costs.
So
And while
basically everything that happened in the last 5 years
it's irrelevant.
doesn't matter.
It wipes out. So it gives you the ability to do what you need to do today. So why that's important also is if you're not in unincorporated Lee County, maybe you're Sanibel or Fort Myers Beach or Estero or Cape Coral, you say, okay, well, how does that impact me? Well, so far, most other municipalities are indicating that they're going to follow suit with what Lee County has
County
done.
said.
So I think we're, as a community, headed in the right direction in terms of helping people to navigate the rule.
Well, good news is good
Huge.
news.
Yeah.
For sure.
And right now, they'll take anything right now.
Yes. Yep.
Yeah, I mean it's a challenging conversation on what does the 50-50 or 50% rule mean, because we never thought we'd have to have this conversation. Like,
No.
ever.
It is difficult, but again, the encouraging sign that we're seeing from policymakers locally, permitting offices, is that people are bending over backwards to help Southwest Floridians right now put their homes back together.
Right.
That's happening at every turn that you see. Now, there's some boxes that have to be checked from a compliance perspective that make some of that challenging, but we're doing what we can as a community to figure it out, and we're getting there. I actually, based on the changes that have been made, think I would probably handicap it as a couple of hundred homes, perhaps in Southwest Florida, that truly will not be able to be built back purely because of the 50% rule. There's going to be a lot more people who decide
Right.
not to. That's a different story.
Right.
But people who are truly left in this pattern of I want back what I had and I can't have it because of this rule, it's not going to be nearly as many as we
doomsday.
fear.
It's not doomsday.
Yeah, I was going to say
Yeah.
it's not doom and gloom, so
Right.
that's good. That's
Yeah.
good to hear. So let's touch on that rebuilding, the cost of rebuilding versus renovating.
Yeah, so I mean, the cost of rebuilding right now, one of the challenges that we're running into is whether you're rebuilding or renovating an existing structure, it's not a great time based on costs. I mean, it's rough, for either scenario. But what's been encouraging to see in some markets is that our markets have been pretty resilient here in the month and a half since the storm. And so some folks, it'll make more sense to maybe sell and move on. Some folks are using that as an opportunity to move on, and maybe they were going to anyway. But other folks who are maybe pushed into that scenario, I don't think that the market is going to be at a level where it becomes a fire sale. There's nothing that's indicating that so far. But without question, the costs are not good, and they're only going to kind of get worse, unfortunately.
Yeah, we could thank COVID for that, right?
Yes.
Yeah, the
Yes.
system and the supply chains are just stretched out. I mean, we have roofers that want to do roofs, and they have no
Absolutely.
supplies to do roofs.
Right. Yep.
I mean,
Perfect
they're
storm.
literally saying, I can sign a roof today, and I'm waiting a year for supplies.
Completely. Yep. It's that bad.
Wow.
So,
Tough. I mean, you had all the issues, then Ian happens, and it just. Now, I will say on the other side of that, we are, because we had Ian, we also get put into a different kind of line now because support wants to help. And I think that's the beautiful thing about actually some of part of the Ian is like we are getting AC units. We are getting
Yes.
right the things that we use on a daily basis to maintain our lifestyle in Southwest Florida. We're getting those. And I think in some ways, the other thing too, I think which is powerful is you've got a little bit of the emotional high for the contractors, for our workforce, and they're motivated. Now that will taper with time, but I think they're that the goodness of human beings and wanting to come out and help others. We've definitely seen that. I mean, it's been super impactful just watching neighbors helping neighbors, and that there's other parts of the country that doesn't happen.
No.
Right.
It doesn't happen. So,
Yeah.
but I think the supply, we're going to get an unfair advantage of supplies. Hopefully, building supplies included in that, which I have seen so far. It seems to be a little bit better than other areas that are still having supply chain issues. We're kind of breaking through because of Ian. So hopefully that continues.
Yeah, no, I agree. That's what we've seen. And I think some of the bigger suppliers have even said there's a specific program in place where they reallocate materials in a situation like this. So again, for a community that was already constrained as it related to inventory and suffering kind of the worst of supply chain issues because of the amount of demand in Southwest Florida, that's definitely been an encouraging sign.
The one insurance point I'll make about the 50% rule or no 50% rule is homeowners, whether you do intend to sell or not, need to maintain that flood insurance policy because there's a lot of history on that policy that can help the new buyer. If you want to sell and that new buyer buys it, there's a lot of history, a lot of goodwill that comes from that old policy. So regardless if you're getting a payout from flood insurance, you should not cancel that policy. We can actually take that policy, move it down to some benchmark coverages, basically a basic policy, right? Just maintain the policy, keep the policy in place, but then you have the benefit of being able to pass that to the new buyer with the history of that policy, and that will save a lot of rate for the new buyer because we're dealing with interest rates now and the prices are higher. But when you add the property insurance and then you add the flood insurance costs, like if you can limit those costs by keeping the flood insurance policy, that's one absolute word of advice is keep the insurance policy, the flood insurance in particular, just lower the coverages down. We'll call it like slab coverage, right? Just buy coverage for the slab, but maintain that flood insurance policy. And it applies in the
That's good
50% rule as well. Whether we don't know yet, don't cancel your flood policy because the next buyer or you can
Yeah, you
actually
need that.
maintain a lot of credits from your
Sure.
old policy. So
Yep.
just note on that.
Yeah,
And it's
that's
the only
a good point.
transferable policy in the state of Florida, right?
Yeah, flood insurance, yeah.
Yep, it's the
Yeah.
only one.
You
Yeah.
transfer it.
So that's a key takeaway then.
Got to
sure.
keep the flood policy.
All right. That's
That's
Absolutely.
good advice.
Yeah.
Yeah.
for sure.
Realtors like that because it's a way to say, look, we got coverage here.
Right, we have an existing policy. Yeah.
We're already grandfathered in. Let's
Yeah.
don't get crazy. And,
Yeah.
Right.
Yeah.
I wanted to touch on something you talked about, seeing the good in people. What have you guys seen in the community? I know that when I walk around, I feel like I see a lot of pain in a lot of people's faces, but I'm seeing the kindness and the goodness come out of people.
Yeah, I'll answer because Greg's probably got a better answer than me on that, given what he sees on a daily basis. But we've seen the same thing. I mean, the absolute best of Southwest Florida coming out. Everyone is exhausted. Everyone is tired. Everyone is maxed out. That is what it is. But, you know, it's like anything where there's purpose behind it. You can endure a lot. We're enduring a lot as a community right now. But there's purpose in it. We're doing it together. And some of the calls that, you know, we're dealing with on a day-to-day basis, when you hear of people's individual circumstances and truly harrowing, you know, situations of surviving the hurricane, it just puts things into perspective and it makes you thankful for what you have.
Yeah.
So yeah, there's been some pretty wild stories, and we're using a lot of temps right now. I have temps that were working for us, living at shelters, hurricane shelters, and all they had left was basically their car and their belongings in their car, but they came to work every day
Wow.
because they knew that's the only thing they had.
Yeah.
Right.
I have to go to work because I'm starting at ground zero again.
Wow.
And they're literally staying at the shelters, driving to our place, going to work, and then going back to the shelter. And this guy did this for at least a month until he got himself back on solid footing,
Yeah.
and then got an apartment. But that's what he was living. I
Wow.
mean, because he was said, what I own is what's parked in that parking space right
Sure.
there.
Yeah.
Yeah.
And that's
I
all
mean,
he had left.
Yeah.
New
But he
perspective.
had a sense
Yeah.
of something he was showing up for.
Yeah.
And a purpose and a reason. You know, I think of when my wife and I left with our 3-year-old to go over to Miami for the storm, and it was the first time we'd ever left for a hurricane. And the convoy coming back across Alligator Alley of ambulances, contractors, you know, as we were getting off on Colonial Boulevard from
You're almost
I-75.
like,
and-
this is weird. I've never seen this.
yeah, it was amazing, and you know, guys with trucks and you know, swamp buggies behind them who were literally going down there to do search and rescue. It's like that. That's the best of people, and we've seen so much of that. It just makes you grateful. People out of market doing that.
Well,
too.
and I mean, locally, the number of, you know, the boats that did survive that were
Right.
making trips to the islands
Yes.
and taking generators and tarps and fuel and water and food. And I mean, just that, you know, those extra hands and people coming off of the island needing a place to stay. You know, people opening up their
Yeah,
homes to
opening up
those
their
people.
condos. We have a lot
Opening
of
up their
people-
condos,
Yeah.
opening up their houses. Hey, I'm in Ohio right now, but my condo's fine. Go stay at my condo.
Right.
Like, I mean, just
Yeah.
countless stories of.
Seen a lot of
just-
that.
Yeah,
actually.
just
Yeah.
special moments that you never would have had that opportunity to
No.
to give or to get, right, without Ian. So kind of
And like what
both
happened in
sides.
Mount Lachey, building that bridge, and a couple of people stepped up and said, I can build this.
Yeah.
I can get
Yeah.
this road open. And a couple of people got on the phone and worked their way up the chain and finally got to the governor. And the governor's like, you can do it? He's like, yep, then do it.
Do it.
Yeah.
And so it's amazing when people just said, let's just do it for the good. We'll worry about
Yep.
the afterwards, but we need to get this done.
Right.
And
Yeah.
we had some, and like some great non-for-profits stepped up, some large churches and some great community stuff stepped up and really helped out and helped us, you know, those first couple of weeks after the storm to get things moving
did.
and just to find that. And everyone was looking for that normal, you know, what's going to be normal anymore. And I'm like, well, could be our new normal for
No,
a
I mean,
while.
when we say normal, I kind of like my one selfish, silly story on that was it was like maybe 8-9 days after the sermon. I thought, man, I just really would like a pub sub right now.
Yeah.
You know, like
Yeah.
just to feel like
Sure.
I'm just eating a public sub.
Right.
Like, you know, and someone ended up bringing me one that heard me say that.
That's
And
awesome.
it
Aw.
was like, because you know, East County did okay, but they had the Publix open a little sooner, and I was like, man, this is just like this feels normal.
Yeah.
Just
Yep.
having a public sub.
Just
so.
even a moment.
Yeah.
That is all
You know
all
you're a
need.
Floridian when
Right.
you're
Yeah,
craving a
that's true.
public
Good
sub.
sub.
Yep. Yep.
Yeah.
Hey, listen, I like my Italian. Okay.
Right.
Yeah, I'll keep that in mind.
Yeah.
Yeah, that point you made about the gentleman who was in a shelter, it's important for us to remember stuff like that too, because we just don't know what people are going through.
Yeah.
So showing kindness to everyone around us, even if we feel like they're not showing it to us, because they could have slept in their car the night before. People are
Absolutely.
Yeah,
going
and
through
I
a
had no
lot.
clue until I sat and we were on
Right.
the job together, and
No.
I asked him, how'd he do? Well, I lost everything. And I'm like, where are you living? In a shelter. And I'm like, and it just floored me.
It makes it real.
And this guy's been coming to work for us for a week now, and he's just trying to get enough money to start all over again. And literally he had his car and his stuff in his car.
One of the questions, Greg, I did want to ask you is, you know, the new term that I had never heard before, and now I've heard it a million times, was the Cat 3 water.
Okay.
Can you just talk about that? Because I think it's important that people understand the water that got into their houses and how bad it is.
Yeah. So insurance companies classify water in different categories. Okay. You know, water from a rain coming down, that's clean water. Okay. It's not gone through anything before.
So I should hold my cup out and just drink that?
Exactly. It's clean. You know.
Please
we used
don't.
we used to have acid rain, but now that's gone. So a Cat 3 is it's been exposed to stuff. So rising water, flood water, and people say, why is it bad? Well, it went through about 4 or 5 septic tanks before it got to your house.
Right.
So it's gone through some stuff that you don't want in your house. So the favorite line in insurance industry, when in doubt, you cut it out. So it just depends how much water you had in the house. So the going rate, if it went up a foot, you cut the 2. If it goes up to 2, you know, or 3, you go to 4, because drywall comes in 4x8 sheets. So a lot of people were doing that 4-foot cut.
Right.
Easy to cut out 4 feet because you usually can find the seam,
Yep.
and easy to put back.
The same exact sheet.
And so people say, why do I cut the 3? He said, cut the 4 because going back will be so much easier.
Sure.
You spend a little more on the front side, but you save so much on the back side because you're not wasting sheets of drywall.
Right.
And
So you cut out the drywall, and let's say it was, you know, there's an insulated wall. What do you need to do next? Because it's Cat 3 water. It's
Cat 3
the
water,
dirtiest water.
you pull out all the wet
Is there
insulation.
Cat 4 water?
Yeah, that's raw
Exactly,
sewage.
okay.
That's raw
But so
sewage. Yeah.
we're as close as we can get
Yeah.
to that. But
Yeah.
so Cat 3 water, basically everything comes out.
Everyone comes out. So people say, what about the other big question is, what about my wooden studs? Okay, it is wood, but here's the thing. Once it dries out, and you can treat wood because, and people are like, oh, my wood got wet. I said, you got to realize when that house was built, that
The wood was exposed.
was
Exposed
exposed
for-
anyway.
sure.
It sat out in the rain, and then
Yeah.
it got put in the house, and it was fine. And then they put insulation, then they put drywall, then they turned on the AC.
Right.
You got AC now, that wood's going to dry out nicely. Now, if you see a mark, then maybe a little bit of mold growth grew on it, just clean it. And under Florida law, you're allowed to clean 10 square feet of mold without having to get a licensed mold remediator. And here's the thing about mold, everyone wigs out. No moisture, no mold. If the structure is dry, there's no mold growing.
Yeah.
Because mold cannot grow without moisture. So mold grows in Florida in 2 reasons. High humidity, and we had structures that weren't AC for a month or so. And if it gets over that magic 61% humidity number,
It's
you
growing.
you can get surface mold, or you get water intrusion. If you dry the structure and keep the structure dry, and you take care of your little environment, you won't have mold growth. And there's some companies.
No,
that-
but I know of people that they got water in their house and they still haven't cut anything out. I mean, that
It gets to a point where the structure will dry because the water came in, the
Right.
water goes out.
eventually it'll just naturally
it'll dry
dry.
cell. Now, what scares people about mold, it leaves marks where it once was. So you'll see where mold has started to grow, but once the moisture goes away, the mold dies, but it leaves a mark.
Leaves the
It leaves,
smudge.
it leaves a spot.
Right.
And so people, and I'm like, look, you're ripping it out anyway. You're taking it all out.
Okay.
So you'll be fine. You don't have to
Right.
get it mold remediated. You're cutting it all out.
Right.
Just cut it out. And then a lot of times to make people get peace of mind, I said, get your house tested.
Yeah.
And a licensed hygienist will test the outside air and he'll test the inside air. If the
Right.
2 numbers are the same, you're not growing anything. You can rebuild
Well,
the
I
house.
feel like that,
point.
you know, I've been asked this question, like, I feel like the certification of that is important though, because, you know, if you got flood water, which 43,000 homes apparently did, that's the number that's been put out, you know, you're going to have a little bit of a blemish because you had flood water. But I think if you have, you know, the get out of jail free card, which is, hey, I've passed all of my tests, like,
as long as you show the structure was dry, and I say, look, pictures are worth 1,000 words, because I've had that question. What if I try to sell him? Show him the pictures.
Sure.
Show him
Yeah.
the pictures you gutted the house. Show him the pictures you dried the house.
right.
Show the pictures you're rebuilding it. I said, those are worth 1,000 words
It's
because
as if it was a new construction.
it's like
at that
new
point.
construction.
Yeah.
You're showing it was built correctly. And even I said, look, take a picture of your permits, everything, build a file so when you do sell the house, here you go.
And you can do it
Love
in good
that.
faith.
You can do it in good,
Yeah.
and like I said, if you want to hire a hygienist, I mean, the going rate for testing, and it starts at like $400, And what makes it more expensive is the more tests they take, the more expensive it gets. And there's tons of companies doing it right now, but you want to be a licensed hygienist because they can give it to you and you can show it. Look,
Right.
Sure.
this is my, so.
Peace of mind.
Peace
Yeah.
of mind. And you can put it in your little file. I had my flood and look, everything was rebuilt and there's my little certificate saying.
So, I guess my question on the appraisal side, how are you going to be able to? Because we kind of know a sense of where the water reached, and,
Right.
and we know it was bad here, we know it was bad there. And we don't have to say necessarily like Fort Myers Beach.
Sure.
We know
Right.
everything got wet.
Yeah.
So how do you? I wonder how you're going to be able to decipher. Is that affecting the resale value or the appraisal value, right?
Right.
And I mean, new construction, we always think, okay, it's worth more. But how is this flood going to play into the value?
Yeah, so I mean, that's obviously something we're going to let the market speak to. We don't have enough information yet, but we are starting to see transactions take place of properties that are selling as is with 4 feet of drywall cut out. And so we're starting to get feedback from the market on what impact, if any, there is. And the thing that I've told people about that is, there's 2 issues as it relates to an event like this. There's the question of, are we going to deal with residual stigma? And then there's the question of, is there a discount that's property specific because of the specific damage to that property?
Right.
And those are separate and distinct issues. The issue of stigma, I think, again, we're going to let the market speak to it, but
Right.
right now, the transactions that are taking place are not suggesting that there's any level of concern or stigma as it relates to the storm. The
Would
second,
you say most of those transactions are in a cash basis,
yeah, most are.
non-financed?
Now there are some lenders that have come up with financing solutions. A lot of
Supporting
our
our
local banks have
community
done
banks.
that. Sure, absolutely.
Because they're here for us after the event.
So that's already been put in motion. There's products to assist on the financing side. But right now, we're not seeing any issue as it relates to concerns about stigma. The part about the damage to keep in mind is there's not some magical connection as it relates to a discount. Usually a property will trade at a discount that is based off of what is this property worth when I remediate it, how much is it going to cost me to get it there.
Right.
Those are the 2 factors that will inform price. It's not terribly complicated. So if I've got a property that I feel like if I put back together is worth $500,000 and I need to do $75,000 worth of work, a seller is probably going to want to try to push for $425,000. A buyer is probably going to want some negotiating room for the risk and the headache and the unknown of it. And maybe it's something then less than that number.
Right.
So cost plus is likely going to be the differentiator.
Gotcha.
And I've already talked to a few people that have asked me that question. I've had several people just saying, I'm out.
Right.
The storm stressed them out too much.
But they're still getting market value
Yes.
based off
Yes.
of what,
Because the location is still location.
Yeah.
And people still want to come to Southwest Florida, and where these houses are located there's a good location. So people are willing to pay for
Right.
that nice location. And people look at remodels and rebuilds like, yeah. And most people buying these houses have experience already doing it. And they look at it like, oh, I can do this, and I
Right.
can put it back exactly the way I want.
Exactly. And people are seeing opportunity there. They
Absolutely.
can move walls and
Yeah.
put the exact floors they want, the exact kitchen.
I mean, one lady said, like, I was going to update it anyway. Just
Right.
accelerated it
Made
on
it
the
easier.
updating,
Yeah.
and now I'm going to update it to exactly the way I want it.
Yeah.
I think one of the things that I will miss the most that Ian unfortunately devastated was the Fort Myers Beach charm
Yeah.
that we had. What do you think the redesign, rescape of Fort Myers Beach looks like 5 years from now?
Fort Myers Beach to me is going to be the most interesting market locally to observe. For one, it was our market that was decimated, the worst. It was completely obliterated in terms of, taking the northeastern eye wall and the surge and just the wall of
Combination
water.
of two punches.
Yeah. But it's also been our market that for several years, if you look at all of our coastal communities, Fort Myers Beach has tended to trade at a discount because there were some older uses and some uses that maybe weren't consistent with current market standards. So Fort Myers Beach is a scenario where I think we're probably going to see the biggest transformation. There's also potentially, some political changes that will happen with the town of Fort Myers Beach. What those look like remain to be seen, but in one way, shape, or form, we're going to have a change that happens with how the town operates, the players that are in the market, because a lot of folks are now coming into market to Fort Myers Beach and are going to be a big part of the redevelopment. Not that any of us would have wanted any of this to happen for this reason. I mean, I think if any of us could press the reset button, we would in a heartbeat.
Yeah.
But we are where we are. And now that we're there, you have to look around the landscape and say, where are there potentially some opportunities and some things to be aware of and keep in mind? And I think Fort Myers Beach is going to be a vastly different place 3 to 5 years from now.
And then by vastly different, I think, I hate to say it, but larger corporation feel because of the opportunity, and they have the deep pockets, but still the charm of a mix of maybe Hickory area where you get nicer homes, coming in.
Yeah, that's a fair representation. Some of what's happened on Bonita Beach on Hickory Boulevard and the new construction that's taken over there the past 7 to 8 years had already trickled up.
It was
onto Fort Myers, so it was already in process. I think it's definitely fair to say that the new version of Fort Myers Beach is certainly going to be a higher priced, higher end product line. Obviously, it's going to be new, but I think even from the standpoint of the product we're going to be looking at high end product. And I mean, again, some of that's going to happen, I think, in our coastal communities in general. There's a reality regarding the cost associated with living on the coast, and we see that in every angle, whether it's taxes, insurance, cost to put things back together if something happens. And so that's just reality. And it means, unfortunately, that some of the options for living on the coastline that were more affordable have simply gone away. They've literally gone away as it relates to this storm. We're not going to be able to put that back together the way that it was. It's just not practical.
Right.
So that's, I think, in a nutshell, the change we're looking at.
And then contrast that to Sanibel. What do you see? Sanibel, pretty much the entire island was underwater. The actual land was. Maybe not every home was underwater, but all of the land pretty much was. So, your single story, older homes, or, even single story on a piling set up. What does that look like? How does that change?
Sanibel, so it's a totally different dynamic, which is why, again, I think that...
Which is interesting because they're literally like
they're right
3
next to
miles
each other.
apart.
Sure.
Yeah.
But I think that you have to look at each market in a silo. And Sanibel has already been a premium market. And I'll use Sanibel and Sanibel Captiva kind of interchangeably. That's been a premium market in Southwest Florida. You didn't have many older uses that kind of lagged from a value perspective. So,
Well, if you did, they're not there.
they're not there anymore, right? And so,
But there weren't as many.
no, there isn't as much, I think, of an upward trajectory in pricing because Sanibel's already been a premium market.
Right.
But I think we're already seeing a number of condo associations that are on the beach that are having to make some difficult decisions. I mean,
Right.
there hadn't been new construction for condos on Sanibel. I think 2003, 2004 was maybe the most recent project. And the building the roof on that building was ripped off.
Right.
I mean, if you look at the aerials post-storm,
Right.
the condos on Sanibel, the roofs you're looking down into units. And that's going to create, again, a series of choices that have to be made about the future of those projects, what they come back as. But I don't think we're going to be looking at as stark a change as we are somewhere like Fort Myers Beach.
Right.
Now, is the setback line on Sanibel, is that going to come into play on any of these condos?
Yeah, so the coastal construction control line
Yeah.
is going to come into play on a lot of things. I think there's probably a couple of unresolved items as it relates to that, but I think it's fair to say that if you had a pre-existing building that was in compliance with that CCCL line when it was constructed, you'll most likely be able to come back inside of that footprint. There's likely going to be some DEP hoops to jump through with getting your permit, but they'll probably be able to put those back in the way that they had them, in the location that they existed before.
A little like a curious question on the historic buildings, because we have some historic,
Right.
Florida historic. They're credentialed. They're in the archives. What do some of them were damaged severely. How do those buildings get impacted?
Yeah, I think that's a great question because, we had buildings that were over 100 years old washed away, which is critical context more broadly about this storm.
It's terrible.
This was
It
not
breaks
a
my heart.
50-year or
Right.
100-year storm event. Like, this was extremely unique. Structures that are contributing structures in a historic district have an exemption as it relates to the 50% rule. Now, it's important to caveat that you can be a building inside of a geographic area that is historically designated, but not be a historic
building.
structure. So the structure needs to be recognized by a historic district. But if you're in that category, you're able to kind of sidestep the 50%.
Are there
rule.
any in downtown Fort Myers that would catch that category that were damaged? Like I think of the Burroughs homes. Is that a Florida contributing historic?
Yeah, and
building?
the Burroughs home, I don't know the answer.
I'm asking
They
about
might
that
be
one.
on the national registry. It's
Okay.
a contributing structure.
Sure.
But I think it might actually be on the national registry. So those structures will be able to build back. We'll actually have, I think, a few of these things in some of our older coastal communities, older fishing
We have-
communities. There's some structures that I think have this benefit that people haven't even realized yet.
Yeah.
So
So we could see some of those older fish villages that kind
Right.
of stay,
right.
which gives you that feel of what it was.
Absolutely.
It'll look new.
Oh, exactly. Right. But you'll be able to, kind of sidestep the
Yeah.
rule on some of those properties.
Keep some of the charm.
Exactly.
Yeah.
Yep.
I do know of a couple historical buildings in the Boca Grande area,
Yes.
particularly that if you've never been down in South Boca Grande, it's fun to go into their historic area. Again, doesn't mean it's a historic building, but go into the historic buildings and you're like, wow, this is
Sure.
old Florida right here. It's just beautiful. Like,
It really is.
and to lose those, on Sanibel and I don't know the specific ones that were out there, but Fort Myers Beach, I want those built back because that
Sure.
is Florida.
Absolutely.
That's like the second generation, right? Floridian want that history there because it's just so special.
It is, and that's again where there'll be some good news. We'll be able to do some things as it relates to those properties, and that's part of what informs what I described earlier about if we really condense it down and say, gosh, how many properties are we going to truly lose because of the 50% rule? I think it's going to be a much lower number than what we initially feared.
Right.
That's good.
There's probably one other update that I would want to make sure I provide on the 50% rule. So I think I mentioned that Lee County revised their ordinance a week ago today. Among the revisions in the ordinance is to the definition of market value inside of that ordinance. And in essence, what it did is it equates market value to actual cash value. So without getting into the weeds on that, the net of that is that the methodology that we use on the private appraisal side is going to have some more flexibility, and it should actually allow for higher structure values to be substantiated because this methodology has been endorsed within Lee County's ordinance. So prior to that, there were a number of ways that structure value could be determined. But now we've got kind of a hemmed-in process of what this looks like. And again, I think we're going to see the other municipalities local follow suit
So
over the coming days and weeks.
Translating just a little bit of that. Remember, I'm just the insurance guy here, but really, like, you're going to be, if let's just say someone had this challenge with the 50% rule,
Mm-hmm.
what's just been passed in some of these provisions allows for a little bit more flexibility than some stringent process that we were looking at before, where they take, just the just value of a property.
Right.
Is that?
Yeah, that's the net takeaway. Policymakers are making it easier through pulling back that 5-year requirement that we
Right.
talked about earlier, through allowing for an actual cash value, and in fact endorsing that as a methodology. Some of the just practical things that are happening at permitting are going to be helpful and be impactful. So I think, again, there's the first step with the 50% rule is, for one, to see if you can get through permitting with that published assessed structure value. That's step one.
That's the value.
and
You can go right on the property
you go on
appraiser,
right.
see your just value.
Yep. You click on that yellow hyperlink that's on the parcel detail page. You pull it up after you put an email address in, and there's a line that says building value. That's the number you're dealing with. And I say that, and
But
people should use that.
that'll probably eliminate
For most people, that takes care of
75, maybe 90%
Absolutely.
of phone calls on, do need to
Yeah.
worry about this 50% rule.
And I say that as the provider of step 2.
Gotcha.
Okay,
I
so
understand.
people, if that doesn't work for them, they need to contact to have a private appraisal done. And there's going to be plenty of folks who drop into that bucket. But if you're not in that bucket, go ahead and use the assessed structure value. It will be low. You should know that. By definition, it's low. No one is saying that that's truly the market value of your structure. We're using those figures kind of as a proxy to work the permitting process. But if you can get through it, then do it. Don't spend your money on a private appraisal or spend the time. Great, move on down the road.
Yeah.
In fact, most of our calls, we're right now we're pulling up people's property information and telling them, "Love to take your business, but you don't need me. Move on down the
How
road."
kind of you.
Yeah.
Gotta love that honesty, though. Yeah.
Greg, I know one thing that's impacted a lot of us down here is the flood and the wind, right? And this question of, well, did it flood first, or did the wind blow first, or was it wind and then flood? And like, you've dealt with a lot of properties, you've seen a lot of properties. How hard is it to determine? I mean, obviously you see a water line flood, but like, did it come in through the windows because of the flood, or was that wind driven, and then the roof, and like, how's that conversation happening right now?
They usually look for telltale signs like this. The structure I saw in Sanibel, a lot of them you saw the water line. Say, okay, this is where the flood was because the water line's right there.
Right, you can see it.
You can see it. And then you look at the side of the building, and if you see like soffit blown away and siding messed up, that's all wind related. And then you saw, like we saw houses where all the soffit left and it literally pressurized the house. And I had ceilings where they got so pressurized it collapsed all their vaulted ceilings.
All the drywall.
All the drywall because
But that wasn't flood.
that wasn't flood. So
That
you
was
can
wind-
actually look.
wind pressure.
So most of these adjusters are, when you get to that level, you can see it's pretty clean cut. This is the flood part. This is what the wind did. And you can look at stuff and like, okay, water didn't make that the metal structure of the ceiling come down. Wind did. And a lot of these structures pressurized. And when they lost a window, the wind came in and looked for a way out. So it either
Right.
went up or it went sideways, and you can just see the way it moves contents, move furniture, move stuff.
Right.
And then the other part was when you saw the flood, you saw what the water moved. You can see
Right.
what it moved drywall, it moved furniture. So it's pretty clean cut now. In some of the larger structures, there might be a gray area and that the two adjusters are going to have to get together and try to work things out. But usually they do. If it doesn't, then I tell people, look, your next step is to hire someone to
Right.
prove your case.
Which
And then-
sometimes they have to. in
Sometimes
those
they have to.
situations.
So, and some people will lean more to the wind side because it's better coverage. It covers more things. Flood is limited. It's pretty much
Very
black and white, and it's right here. So now I've seen it on the other end of the extreme where I look at a house and I'm like, this is all flood. Well, I'm going after my homeowner's policy, and I'm like, you're not going to go very far, man,
Right.
because there's nothing that the wind did here.
Right.
Yeah.
This was 100% all flood.
Right.
And if I can see it,
Sure.
I'm sure the adjuster and your wind adjuster are going to see the exact same thing.
Right.
And of course, someone's told them, oh, hire this, hire that. And I say, okay, you can, but realize it's pretty clean cut here. There's no gray area.
Yeah.
So what would you say is the difference on the next steps on how to handle it, depending on whether it was flood, wind, water coming from the top?
Usually, like the main thing is to stabilize the structure. So I told everyone, because look, I was overwhelmed, and what I was doing is giving advice to people. Stabilize your structures, make it stable. And they're like, well, what do I do? Seal the roof, tarp the roof. You're stopping for any water from coming in. The flood part, you're going to cut it all out.
Right.
Okay. And once you cut it all out, the building is now stable. It's not getting any worse, not getting any better, but it's stable. And then you can take a breath
Right.
and analyze exactly what insurance coverage you have to do, what's going to cover the wind, what's going to cover the flood. And a lot of people, they paid years of flood policy and they never really looked at that policy, and then they're finding out. And it was, look, it was a Band-Aid policy.
Right.
It was there to help you rebuild.
Sure.
Not
Get you back.
get you back, but to help you rebuild. And that's what you're going to have to decide.
Which is a tough message. I mean,
It
we've
is,
had
yeah.
to deliver that message, but it's also, it's not like there was a better option. If there was, there's so few of them. Most of it's all national flood insurance program. So
and the way I explain it, I said, look, no private company in their mind would take on this risk. Right? So
Sure.
who had to take it on? The government had to take it on
Right.
because no one in their right mind wanted
Yeah.
to take on this risk.
Right.
So, on that, one of the biggest pieces of advice we're giving to our clients right now, particularly when they haven't heard, from their adjuster, right? Maybe the field adjuster came out, inspected the property, and then the next phase is the desk adjuster. All the information goes inside to somebody that sits at a desk. They are desk adjusters. There's no other fancy name we give them. That's what they do. They get the information, review the information, and then at that point typically provide their offer, their estimate. But there's a time gap there, right? Now sometimes that time gap ideally would be only a couple weeks. That's an ideal situation. Yep. This is a huge storm. Sometimes it's a couple days if it's a isolated event, but this is different. But in this time, if you still have not heard from your desk adjuster and it's been more than 2 weeks, I always recommend call.
Yep.
Call, email until you get somebody.
Yep.
Until you get somebody.
Let them know you're
But
on the radar.
then you're on the radar, and then the next step is, okay, now you got their attention. Now they're going to touch it and work on it. But right now, while you're waiting for them to do all of that work, is go and get the bids. Go and get all the offers
Right.
to repair the roof. Go and get the offers to repair the aluminum, all the soffit and the fascia and the gutters, the fencing. If you have significant drywall, go get your insulation. Hire a contractor to do it for you, one or the other. But go get all of the information. That way, and I see this, we get the insurance offer, and what do we think? And that's not very good. But you have to understand they're using a system. They're using software. This is a national program. It's not real time. It's not real time, Ian. So, after that, you've got your bids, you send it back over and say, hey, thanks for the offer, but here's what I'm seeing.
Yeah.
And so right now, go and get your bids. Go
One,
collect.
and I'm assuming you see that often too, because people almost get in this frozen state of they're waiting for the adjuster to get back, and then they get the number, and then immediately you think, well, does that cover it? Well, did you find out?
Yeah.
Get ahead of it. Yeah.
And right now, look, it's just like anything. You got to get on the list. The
Right.
pool cage people.
But you can still go get the estimate.
You go get
Just
a list.
get the estimate.
Yeah, get a
Sure.
list. The drywall guys get on their list. We're just like us. We're going through all our.
Right.
We're calling people. Do you still need help?
Right.
We're going through our list, and
Right.
we had people go to our website and sign up for stuff, and we are going through our list and now talking to people. Some people's like, no, I got it covered, and some people are like, you're really going through your list? Yeah, we
Yeah.
are. We're going through our list. So yes, start
But,
making phone calls and get bodies out there to
Yeah.
give you
Get
information.
your proposal. You don't
Yes.
have to execute the roof.
Nope.
You don't have to put a big deposit down, but get the
Yeah,
bid.
get ahead
the
of it.
proposal.
Well, we have time for one more question. So
Okay.
you mentioned no moisture, no mold.
Yep.
Does that just apply to the wood, or is that drywall and insulation?
Same thing. So I get phone calls that, because we had a wind-driven rain and we got, rain went up in the attic and it got some trusses wet. And they go up there and like, oh my gosh, I've seen mold. And I said, you'll be fine. It's an air-conditioned space in Southwest Florida.
It's going to have humidity.
And
in
you're
it.
going to have humidity in there. It got wet. It dried itself out because the attic went back to 120 degrees the next day. It
As it
dried
does.
itself out. So there's no moisture up there. It just left a mark. And I said, and they get worried. And I said, do you live in the attic? No. Then you're good. Control your environment. Your air conditioning's on. Yes. You're controlling your environment. Mold doesn't go where it doesn't have an environment to grow.
Right.
If you control your environment and a couple of spots on your trusses, you'll be fine. And if you want to, again, go clean it. You can
Right.
clean it.
Sure.
It's just left a little remnants where it came through the ridge vent or came up through the soffit. And
Right.
and if you still feel nervous, get a professional to come out there. I mean, there's insulation companies that'll come out there and look through your whole attic for you and give you tell you what needs to be done or not needs to be done. But up in the attic, it dries quickly.
Okay.
No moisture, no mold.
that's your final answer.
No
moisture, no mold. Okay.
Mold doesn't. People think people think mold goes up the walls and creep around. It doesn't.
That's
do
how
that.
I picture it. So.
Right. It doesn't do that. It only grows where it has environment to grow.
Yeah.
If you control your humidity and you control the moisture, you will not have mold growth.
Awesome.
So.
All right. Well, we don't have much more time for question and answers, but where can they find you guys? If they want to reach out to you.
You can go to our website. It's fireserviceusa.com.
Okay.
Our website, and you can go to our.
Yeah, they need to call you, Craig.
Yeah,
That's what
well,
you
yeah.
gotta-
Right, yeah.
His
Yeah,
cell phone number is 239.
Yeah.
Yeah, go to our website. You can actually, we're still taking people who are signing up. And look, some
And they
people,
go through their list.
And we do. We go through our list. Now, some people, every time I look at, because you have a notes section, and some of these notes are just heart-wrenching notes. And you're like, oh my, so
Yeah.
yes, we do go through our list, and we're trying to go out, and if nothing, we give you advice. And some people are so badly damaged, they're like, look, before you go any further, you really need to get appraisal and really
Right.
think about what you're doing.
Yeah.
And so we're trying to send people down the right road.
Sure.
Or before you go crazy and spend a lot of money that's going to get torn down,
Right.
get some good quality information from the experts.
Right.
I tell people, look, the experts will help you. They know what they're talking about. The roofer does.
Right.
And if you don't, and everyone says, I don't like my adjuster, you have a right to ask for another adjuster. It's a
Hey,
free.
yeah,
and
it's a good tip.
So Fire Service,
USA.com.
USA.com.
Perfect. So Maxwell, Hendry, and Simmons, our website is mhsappraisal.com. Oftentimes, it's also best to just call our main line, which is 239-337-0555.
Okay. And we'll make sure to put that information at the end of this live
Great.
as well. Thank you guys so much.
You're so welcome.
We are going to cut to a break. When we come back, we have Denny Bowers with the Bowers Group at Compass, and we have William Dukes with Summit Mortgage. So lots of good information coming. Lending on a destroyed home, special loan option for those who did lose their home, and we're going to get lots of thoughts on whether to rebuild and stay, and where real estate is going in Southwest Florida. Thank you guys so much.
So
Appreciate
welcome.
it.
Thank you.
Awesome.
How simple is it to get a home insurance quote? We only need 3 things to put an option together for you. 1, we need to know who you are, aka your name. 2, we need to know your address so we can look at the particulars of the home. And 3, we need to know how the residence will be used. Is it your primary home, a seasonal home, or an investment property? That's it. That's all we need. Your name, your address, and what your home is used for. With 35 home carriers, I can guarantee we can find better coverage at a better price. Don't miss out on your savings. Contact us today. Do you know if your pool cage is covered? The better question is, do you know how it is covered? We currently write with more than 35 home carriers in Florida, and just about every insurance company does it differently. Some insure your enclosure as part of your home value, while others insure it as a separate sublimit. These sublimits can be purchased starting in $10,000 and then typically in $5,000 increments from there, 15, 20, 25K, and so forth. Understanding the wording of the policy is what is most important. Some policies only cover the aluminum portion of your pool cage and exclude the screen materials, and others cover both. It can be done a number of different ways, but the most important thing is to know what you have so you can plan accordingly. Another important element is to ensure that you have enough coverage. After a hurricane, a typical $10,000 Florida pool cage can easily cost between $15,000 to $20,000 due to labor and material shortages. A member of our team is always available and can answer any questions you have in regards to your pool cage.
At M&M Multimedia, our driving purpose is helping businesses produce cutting-edge content to help increase their market share. How do we do this? By creating content that makes you learn, laugh, cry, or buy. If image is everything, we believe creating emotionally charged videos speaks more than 1,000 words, drawing your audience in and converting them to happy customers. Since we started serving Southwest Florida in 2009, we've strived to provide the best value in the market. Just bring us your idea or objective, then sit back and watch our team of multimedia producers bring it to life. From creative directors, constructional designers, and copywriters, you'll be in great hands from the beginning to the end. making sure each step of the production process is given the attention to detail it needs to be effective. Our goal is to move the needle by giving you real-world solutions that includes identifying your target audiences, creating messages that speak to their needs, and ultimately converting them into loyal advocates to your brand. But we don't stop there. As we say, we embrace the multi in multimedia. Once your video is produced, we have the resources and partnerships to help promote it to your audience. Customers today want to engage with your business. M&M Multimedia will take it a step further and help you tie the knot. Learn more by visiting learnlaughcrybuy.com.
How simple is it to get a home insurance quote? We only need 3 things to put an option together for you. 1, we need to know who you are, aka your name. 2, we need to know your address so we can look at the particulars of the home. And 3, we need to know how the residence will be used. Is it your primary home, a seasonal home, or an investment property? That's it. That's all we need. Your name, your address, and what your home is used for. With 35 home carriers, I can guarantee we can find better coverage at a better price. Don't miss out on your savings. Contact us today.
At M&M Multimedia, our driving purpose is helping businesses produce cutting-edge content to help increase their market share. How do we do this? By creating content that makes you learn, laugh, cry, or buy. If image is everything, we believe creating emotionally charged videos speaks more than 1,000 words, drawing your audience in and converting them to happy customers. Since we started serving Southwest Florida in 2009, we've strived to provide the best value in the market. Just bring us your idea or objective, then sit back and watch our team of multimedia producers bring it to life. From creative directors, constructional designers, and copywriters, you'll be in great hands from the beginning to the end. Making sure each step of the production process is given the attention to detail it needs to be effective. Our goal is to move the needle by giving you real-world solutions that includes identifying your target audiences, creating messages that speak to their needs, and ultimately converting them into loyal advocates to your brand. But we don't stop there. As we say, we embrace the multi in multimedia. Once your video is produced, we have the resources and partnerships to help promote it to your audience. Customers today want to engage with your business. M&M Multimedia will take it a step further and help you tie the knot. Learn more by visiting learnlaughcrybuy.com.
All right, guys, we are back now. We have 2 of our special guests here, Denny Bowers with the Bowers Group with Compass, and we have William Dukes with Summit Mortgage. So before I get started with that, wanted to tell you that we also have a question and answer option on the Facebook Live. So if you have any questions for us, be sure to drop it there. I will do my best to look over here and ask them these questions because I know we have a lot of good information and a lot of people are really tuned in for this part in particular. So before we jump into that, I wanted to tell you all what we're drinking here. Flying Eagle Kombucha. Everybody
Flying
show your
Eagle
cans.
kombucha.
Yeah.
I am enjoying mine.
Yeah, I am always enjoying my kombucha. So a little bit about Flying Eagle Kombucha. It is a Southwest Florida-based company. They brew and can all their kombucha here. They support local farms, and 15% of their proceeds are going to Hurricane Ian victims right now, some Southwest Florida relief funds. So, just wanted to give them a shout out. I am a big kombucha fan. I think some of the people here are trying it for the first time, right?
I think it's great.
Yeah.
I'm actually impressed.
Yeah.
I mean, I'm not normally the tea guy, but all about it.
Okay.
Well, it's gonna make you feel good because it has all those wonderful probiotics in there.
That's gonna
We can
help
talk
me.
about
Yeah.
the gut-brain connection on another episode.
That's take that for another one.
Yeah, but
Yeah,
we're
do
gonna
some
all walk out a
research
little
on that.
healthier. I'll send you some information for sure. All right, so let's jump into it. A lot of questions for you guys. So we want to jump into lending on a destroyed home. Any information on that?
Well, we definitely have, as a lender, we are really controlled by federal guidelines. And the big thing that we have is that a home that we lend on has to be safe, has to be marketable, and it has to be livable. So, and we get, obviously I don't go out to these homes to look at this. We get guys like Matt, who was here before, who are our eyes in the lending industry. So one of the big programs when we have natural disasters is an FHA program called the 203H. And the real benefit of this program is if your home was destroyed or is unlivable, whether you were the renter or you owned the home, this FHA program will allow us to put you into a new home that you qualify for without a down payment. And not only that, but let's say the home that you were living in, you have a mortgage on it and it was destroyed. We can ignore that payment, that mortgage payment on that when we calculate your debt ratio to qualify. And that's a huge deal. That's for the people who own the home that was destroyed. It might even be a better deal, and Danny, you can go and kind of speak to this. One of the things that realtors are always looking to help is people who are renting, help them buy. One of the biggest things here in Naples that we have as a impediment to that is coming up with the down payment. And even with an FHA, a regular FHA program, coming up with 3.5%, on a
$500,000.
Correct, because it's the entry point for single families in Collier County, $450 and up, right, for single families, and 3.5% of that, you're looking at 15 grand plus your closing costs. That's a real impediment. With the 203H, all of a sudden you don't have to come up with the 3.5%, and it also allows the seller to pay upwards of 6% of the closing costs, or 6% of the purchase price towards the closing costs, which will be much more than the actual closing costs. And you literally could find yourself in a situation where you could get into a new home with no money down. A legitimate no money down program,
Yeah, not back in the heyday.
Yeah, not some of these other things that are out there that are kind of pie in the sky, because I mean, an FHA loan, I can get you into that 30 days. 30 days. We're a direct endorsed lender. We write our own files, and it's not that big a deal.
A question on the 203H. So are those only triggered when a federal disaster is triggered? Is that when those
Yes.
are available? So
Yes.
that's
Yes.
the only. So
Correct.
Obviously, we had the benefit of being considered counties that have federal disaster, which triggers this new loan program. So,
And there's a time limit. You have 1 year from the event to file or to apply for that financing.
Well, I think the biggest thing there is just with being able to waive the mortgage
current debt?
on the current debt. Yeah,
Yeah.
because that's
Now, let's be clear. On the current mortgage that you have, you've got to be participating with applying for insurance to go and to cover that home. Okay, but we're not going to, as long as you provide proof that you've done everything you need to do, we can ignore that debt as far as your debt ratio.
Okay. That brings up another question, though. So that's wonderful. It's a ray of light, really, in a dark time for a lot of people in Southwest Florida. But if that debt is being ignored for the debt to income ratio, are people still paying their mortgage on their destroyed home? How does that work?
Well, that is
a couple different ways.
It remains to be seen at this point.
A lot of it's deferred right now.
but they can get a
Correct.
forbearance.
Correct.
It's a deferment.
You're seeing a lot of this, and one of the things that the 203H allows us to do is if you stop making your payments on your mortgage after the event, okay, we can ignore that. Now it's going to affect your credit score.
Right.
Make no doubt. If the company that you're supposed to be, your current servicer, if you're 90 days late, well, it won't be 90 at this point, we can ignore it as far as qualifying you Normal financing says no more than 2 30-day lates in a calendar year or in the last look back year. And if you don't have that, you can't finance. But this is going to allow that. And this program goes down into, I think, like 580 credit score.
Okay, that was my next question.
Yeah,
'Cause if
so-
it's ignored, but your credit is being impacted.
Now, if you were missing payments before the event, well, all bets are off because you're
Right.
And I think it all
Beautiful
play into
day.
part. I mean, then for the buyer, obviously, and on our end, you're looking at. So if they file for the insurance on the destroyed home, if it's an owner, they file for that, then they'll get the insurance money hopefully for it if they had flood insurance, or if it was a wind activity with their main insurance. But then being able to get that money and then liquidate whatever's there to pay off that debt. Otherwise, as a buyer, you're going to have both debts at some point. So and that's your caveat
Right.
between the two. But
Well, yeah, I mean, in that place, like receiving the insurance proceeds from a flood claim, for example, you have liquidity, which is powerful.
Yep.
I mean, you can make that decision to, if you did not file for a forbearance, because mortgage companies are usually pretty lenient when there's the catastrophic event. They'll do, in my past experiences, I've seen 90 days or up to 6 months. They actually just tack it onto the end. It's
Correct.
It's a nice benefit of financing with a federal program, but then you have the liquidity. So if you didn't do a forbearance, you still make your payment, right? Because you've got
Correct.
the cash from the insurance. Decided, am I going to fix my house, or do I want to sell it and go to,
Yep.
do the hybrid loan and go? Or I don't know if
And
it,
there's
if
the
the H
other-
stands for hybrid. I don't 203H, but
the other part too, I mean, if there is any silver lining with the appreciation that everybody's seen over the last
Right.
3, 4, or 5 years in Southwest Florida overall, if there's any silver lining, is most people do have,
Good size
just the
equity.
land value itself is going to be substantial enough. So I think it can offset some things in cost wise. And so again, it's a numbers game, but I think that's a great opportunity for,
It
and
is.
especially with renters.
and
So-
I
Yeah, that was a
Especially
good
with
point.
renters.
Yeah, that even renters have that.
I think
Yeah.
that
100% for
Yeah.
renters is huge.
And
It could be
that
their-
actually is the easy peasy. I mean, because they literally just have to prove the house was damaged and can't live in it, and off they can go.
And honestly,
You know?
it could be people who were saving and couldn't buy a home, and now that opportunity has presented itself to them.
Yep. One thing to go on, you brought something up, and that is when people apply for a claim and they're getting cash, typically those checks are written in their own name and the
Also in the-
mortgagee.
And the lender, yeah.
So I know, I'm not certain about other lenders, but at least with Summit, our policy is up to $40,000. We just send it in, they sign it, and it's done. Over 40,000, then the company, the servicer is going to want to make sure that the money is being used to rebuild the house.
okay, that's good to know.
So-
Yeah, because every bank, especially if it's a portfolio loan or private financing, or a small community bank, may even be different standards, different
Could be.
guidelines.
Could be.
Yeah.
But,
But 40,000, I mean, should be a couple months of mortgage, right? I mean, hopefully,
Yeah,
if we're talking about the 203H
Yeah.
financing. So
yeah. So,
Yeah, absolutely.
so I mean,
and that also can apply if someone, unfortunately leaves our area, they can finance the property outside of our area, correct?
correct.
So, I mean, not that we want anybody to leave. Everyone stay
Right,
here.
everybody
in
stay.
Southwest
Yeah,
You
Florida.
don't even think about that.
Buy a
That's good
house
point.
here.
Yeah.
Yeah.
But you could relocate, to Georgia or,
Right.
No,
Some
remember
other
too, this is FHA, okay? And as opposed to Fannie or Freddie, so, and it's also, this is only primary residence. This is not
Second home. or
vacation
investing
home or investment home for you.
And is
That's
there a
allowed by
cap?
this program.
Is there a cap on how much?
Yeah,
the
I think
home value can
we're like 547,000 in Collier.
Okay.
It's enough.
be? Okay.
It's enough. I mean, nobody's supposed to get rich off of it. It's
Yeah.
supposed
Right.
to give you an opportunity to go and get into another home as
Right.
opposed to having to rent while your current home is being fixed or being sold.
Right.
Right.
Or figuring that out. So, what's your advice on that? On whether to sell, stay?
I think the hard part is for most of there's certain areas here that weren't directly on the beach or, in a very high value area, but you look at Fort Myers Beach or off Fort Myers Beach. So I think the hardest part is the normal person, the working class that, saved up the money, bought on the water. And then it's going to be, I think the big thing, and they covered it you guys covered it on the first side, but it's going to go to the 50-50 rule. I mean, most people, if they don't mind staying there and having the risk of another hurricane hitting them, that's a risk that all of us have, inherent risk here in Southwest Florida. Being on the water is a higher risk, but if they want to rebuild, I think they're going to be limited to what the county or what the city makes them do,
Right.
or allows them to do.
So your kind of question on that, which we previously touched on, but like you're having a client, they call you and they're saying, hey, like I'm coming to Southwest Florida, like I want to buy a house here, and like they want to move in, they're following a job or a career,
Right.
and they come here. How often are you going to get that question? Did this house flood or?
Well, it's already.
Yeah.
I mean, it's
And-
a question straight up
and
right
then,
now.
Like, how much margin does that take away from
So-
a house? Like, what's the conversations there?
And it's tricky because, and it goes into the flood zone aspect of it and how much water. So obviously, homes that were completely underwater versus a home that got a foot of water. So, how I try to educate them is, right, this is the worst storm that's ever hit Naples, Fort Myers, Southwest Florida. So in that, if it's a house that had a foot of water, okay, the worst storm ever, and there was 1 foot of water in the house. So that's, you have to just,
Which, and also when you're talking to somebody, maybe not directly from here, or they didn't live that moment with the foot of water,
Right.
like the trauma isn't as real.
it's not
That's
true. Yeah,
true,
there's
yeah.
not
They
a
just
trauma.
think, oh,
so
a foot
it's-
is,
and that, but it's laying everything out there. And I mean, I think right now is just as transparent as you can be,
Right.
in this professional world that we're in. Like, you just got to be as professional and transparent as possible, and answer their questions. And then, but also with that is, if they got a foot, there's a good chance they're in a flood zone, and that's where you come in. And then
Right.
what is the insurance aspect of it, and how much is the flood insurance going
Right.
to be, and does the current owner have that policy? And so there's a lot of variables, but it's just kind of the ebbs and flows of it, I think.
Has has local board of realtors or even your company talked about or actually added an addendum at this point regarding?
So they do have a Hurricane Ian addendum that's there. So it's
What does it basically say?
that's a good question. I'd have to read it again, but I've had just one transaction.
it's
Just
just a FAR
notification.
bar.
It's on the
component?
Naples Board of Realtors.
Naples
So
Board,
in
okay.
Naples, we usually use the NABOR contract,
Yeah.
and FAR, I don't use as often, but I'm 99% sure they have
They're very close.
And it's just that to make sure you're doing all of the inspections necessary, making sure that if it was flooded, if everything's disclosed, and
Right.
that just kind of puts everything in one blanket statement as opposed to anything else. So.
Instead of everyone doing their own thing to show
Correct.
whatever.
It was like
information.
whenever Chinese drywall came out.
Yeah.
And,
I remember that.
Mid 2000s, that was same thing. It's
Yeah.
like they have that blanket disclosure that you're supposed to get it checked and so on and so forth.
So far on that, like you're getting the question, did this home have flood insurance? And you can be upfront about it. I guess my example I gave probably wasn't the best one because I was thinking somebody's moving here, they need a house right now.
So mine is.
If they had a foot of water,
right
they
now,
might not be
because
able
I
to move
think,
in.
and I mean, we talked about it briefly prior to a conversation, but I think we're still probably 3 to 6 months out before we have where claims are settled and people really know what they're doing. So in the transition that I've seen so far, it's more off market or it's all cash deals. It's people that maybe didn't even have insurance, because there's a lot of people that
Right.
didn't have insurance, period.
Right.
There's a lot of just long time equity, long time ownership in Southwest Florida, so they may not have a mortgage and then therefore didn't have insurance. So now they're just selling it at land value, and there's a ton of that going on. So that doesn't even come into play because it's someone that's just going to scrape it and rebuild. So I
Right.
think those questions are really going to come into play probably first quarter of next year, where it's going to be a house that had been sitting, and if they're able to rebuild it with the 50-50 rule, then that question will become more, and that's where sellers.
Well, Matt had
disclosure and all
talked
that.
about the 50-50 rule, and I was just thankful to hear actually the numbers will probably be relatively low that actually have hit that 50% number. He said maybe a couple hundred. A lot of people will sell and not deal with
Correct.
it. So those aren't counted in that, but maybe a couple hundred that have to go fight, with the picket. Or
Right.
the what am I trying to say? I can't even remember the
Protest?
pitchfork.
Protest,
The
yeah.
pitchfork. No,
Yeah.
you go to City Hall with the pitchfork, and try to fight for your appraised value. But yeah, I mean, I think my concern, and it is, I think it's a legitimate concern, is just like, like, can you imagine everyone, new people to Southwest Florida being like, did this house flood? Like, I feel like that's just going to be a question that gets asked, which frustrates me because we can mitigate a house, we can rebuild a house, and it's like it never happened.
But it even goes back to just not even talking about a storm or anything, but just the fact of mold and mildew. Well, we're in Florida and it's 100% humidity 9 months out of the year.
Yeah.
So like you're going to have a mold and a mildew
Right.
regardless. Not that it's a bad mold, but
Right.
so
Right.
that's even, an education for people that have never lived here
Right.
or whatever. If there's a mold report that comes back and it has one and it's
That
not
happened before Ian.
that happened
Yeah.
before
That was
Ian.
not
That's what I'm,
just an Ian
that's what I'm
problem, yeah.
saying. So
Welcome
like
to Florida.
now factor in
Yeah.
factor in Ian and things flooding or whatnot.
Yeah.
So I think it's, in our profession and real estate profession, I think it's, again, where sellers have to be transparent on a seller's disclosure. They have to be, just the more information you can give them, it leaves all the variables
Right.
out, questions out that aren't answered. So
Yeah.
One of the questions I was just, like, I know what we can offer, particularly on a home that has damage, right? So think of insurance. They want to write it where it's not damaged, right?
Right.
I mean, they don't want to intentionally write something that's broken, and that makes sense. But how does that apply to the lending side? So, like I know different loans and different programs, but if there's just a pool cage down and there's soffit missing, does lending get affected by that?
In the sale of that place and a
Right.
mortgage
So
on the
new
people?
buyer, Denny sells a property.
so
and
not damaged inside,
Okay.
just pool cage
just
and
the
exterior.
simple.
A lot of that superficial stuff is, especially pool cage, is not going to affect a lot of stuff. I mean, they can even do, because we all know at that point the seller and the buyer are talking about
They see
maybe an
it.
escrow
They see
holdback
it,
or,
right? Yeah.
or
A lot of
something
it's going
like
to
that.
be more on, like as long as it's protected by a fence, because then
Sure.
it goes into the whole safety
You
hazard.
gotta have a 4-foot fence,
Correct.
right? Lockable fence.
Yep. So we had that a lot in Irma. A lot more wind damage. I mean, in my
Right.
experience during Irma, as opposed to Ian, was more wind damage, so screen cages and things of that nature. So we had to go through a lot of that, and just putting up temporary stuff so
The
that we
orange,
could get it
the
closing.
ugly orange
Yeah.
fences. Yeah.
Yep. So where this one was more
You know,
water.
Danny and I were talking offline when the previous panel was in here. We were talking about homes that are starting to get fixed and things like this. And there's one thing that does, if the new buyers are getting a mortgage, what happens is title company does their search, and if they come up with a permit, now as a lender, we're okay if they're an open permit. That's not going to stop us. But if there's somebody in there that has pulled what they call an NOC, a notice of commencement, the title company is going to ask them, have you finished? And if so, can you sign the notice of completion and tell us that you're paid? Because otherwise,
Yeah, you don't want to open.
we're not going to lend on that, because there's a potential mechanics lien by somebody who has not been paid yet.
Which you're second in line then as a mortgage. So
Correct.
you're,
And we will not be second in line.
right.
That's so
Not
selfish of you.
Not with family.
How could you?
Now, a question on that too. So, like I have 2 homes now, and people are waiting on just to figure out whether they're going to rebuild or not. Now, both places are completely gutted of everything that was wet, and it's not habitable, it's not marketable in what the mortgage people want. So,
Safe.
not safe, yeah. So if someone's trying to buy it and there is an insurance claim on it, it would have to be just a cash deal that's going to self-insure.
It's going to be a problem for the insurance, and that's where we're headed, right? So we're going to have a lot of homes that sell with that existing damage,
Right.
that the 4 foot of drywall, or
And if that claim's still open, does that get assigned to the new buyer?
you can
or,
Can you read that word there?
You can assign the clue reports, yeah. So you can assign the existing claim,
okay,
because it goes back to the date of when it happened.
right,
Right, that was the date of the event. Coverage was in place. That can be assigned to the new buyer, and future proceeds could go to the new buyer through what's called an assignment of benefits.
Right.
So that's going to happen. I mean, there's going to be first round of funding that'll come from insurance proceeds, through the loss, and then the new buyer comes in and can actually take assignment of that. The seller can assign it to them, and maybe get round two. Like, hey, we missed some things, or we didn't see everything, or when we took the roof off and replaced it, there was more plywood damage.
And the new homeowner can do that.
New homeowner can
Okay.
take that assignment. They can take the benefits of the old policy, because they're, insurance is a contract, right? It's a contract that stipulates here's what we're covering,
Right.
and that can be assigned to someone else.
So what if that buyer tears the house down?
Well, then there's not much left to assign.
Right. Then it basically wipes it out, right?
There's nothing to assign. Now, if they tear the house down on the homeowner's policy, that's the wind policy, right? That doesn't need to be maintained. But on the flood insurance, that's where we were talking about. Make sure we're going to minimize those coverages. We're going to leave that policy in place,
Yeah.
because there's still benefits that can pass to the new buyer.
Okay.
So we want to keep that flood policy, absolutely.
Okay.
In those cases, the full benefits of the policy have been received. Or
Right.
when the house gets knocked down, they've gotten everything they can out of it. There's not going to be any reason to assign.
Because that's where, like, especially like Park Shore Moorings, areas of Naples, and
Mm-hmm.
they took on damage, and it's a lot of 70s, 80s
Older
construction and
style.
lower, and they have to come up in elevation, and you had from 1 feet to 5 feet, and
Yeah, and so he's pointing at a word on a paper here. That's it's one of those terms we insurance people love to have, but it's called a clue report.
okay,
And basically, in our world, it's a loss history report. And so if you file a claim on a property, that address will have that claim, and it's held there, and it's seen. It's
like
the
a
industry
vehicle
sees
report.
it. Yep, we see the claim, and we can also see if the claim, limited information, that it's protected information, but it shows us if the claim is open or if the claim is closed. If it's closed, sometimes it'll show us the dollar amount that the claim was.
okay,
As it'll actually show us what was paid out on this policy. Now that's going to come with, not only are we seeing it as the agent, but our underwriters inside are seeing it, right, at the companies that we're writing these policies for. We're going to have to clarify, this claim is open, what's the damage at that property? What's going on? If it's closed, we're going to have to clarify, okay, we want to see what was fixed.
Right.
Right? Now, that's going for the new policy. The existing policy,
Right.
they don't come back and ask, hey, that check we sent you, did you fix that roof? Like that
Yeah.
mechanism doesn't exist.
Right.
But for the new buyer, they're gonna have to show, hey, the roof is redone.
If you see an open claim though on the clues report, you're not going to go and insure that place.
So it depends. That a little bit's changed on that, and that used to be the way it was. A little bit's changed. It's on an exception only basis right now, and we're gonna have to provide really good information that shows that the claim was open. Maybe shouldn't have been, because there's not a lot of damage,
got it.
right? We just haven't gotten the C yet, the closed word on the report. And so in those conversations yet, like, hey, we had a roofer come out, we thought we were going to have damage, we didn't, so we opened a claim, now we need to close it. Just those reports, though, are kind of like
Yep.
credit reports. They're only reported so frequently, right? Like every 30
And
days.
we have this dance between in the sale whether there's a cash or a mortgage.
Yeah,
Because
yeah.
all of a sudden it changes the rules.
Yeah.
If the new people are getting a mortgage, and
It does. Yep.
it's just different.
It is. But we're going to have, we'll have claims,
oh yeah,
September 28th, 2022. We'll see a lot of 9/28/2022. It's going to be a date on a lot of policies where people just cautiously opened a claim, and maybe nothing was paid out and they closed it. But those reports, they'll hang around for about 3 years. That information will matter for about 3 years. We'll have to disclose it on all the properties. Kind of like Irma, same
Is there a
situation.
time limit that people have to file a claim?
That's a great
it's
question.
3 years, isn't it?
It used to be 3 years. Legislation passed that changed that to 24 months.
Okay,
Irma was 3 years, and now it's 2.
okay.
So
Why would somebody be filing a claim 2 years later?
that's a really good question. Our industry was advocating for 12 months, 1 year.
Yeah.
So you got 1 year after a claim, but there's a lot of money around insurance on the claim side. Particularly, Trial Bar loves it, and that's a big adversary. They want it longer, right? They'd love it to be 5 years,
Right.
forever. You can file a claim forever for something, but
Interesting.
there is a reasonable number. Maybe we agreed on 2 years and nobody liked it. Attorneys wanted 3, we wanted 1, but
Yeah.
it's 2 years today as it stands. So
It's going to be interesting. Again, Denny and I are talking about that. What the face of west of 41 is going to be in the next 2, 3, 4 years.
I think it's going to be a ton of I mean, what we're seeing is, and I think this is one of your questions, but what we've seen just in the last 40 days, 45 days, but it's west of 41, and I'm predominantly, my team covers a lot, but I'm predominantly Naples and Bonita, but especially in the Naples area, there's a lot of older homes that are on the beach or one block off the beach that were built 50s, 60s, 70s, and they've never flooded. And the land is worth, some tens of millions.
Right.
And if it's beachfront, because in all of Naples there's only 190 beachfront lots. So you have these families now. Granted, it's tragedy that they lost their home, but they could sell their place for 10 million or 15 million or whatever. So that's going to be a huge. Now it's a 3-year build all day long, and I heard on the last panel is with, especially on the beach, and you have your coastal conservancy line and all that stuff. There's a lot of variables that go in because that goes into the state, and there's time restrictions there. But and then there's a lot of the older condo buildings that the first floors are gone, and people are coming in to try to buy the entire 21 units or 25 units or 16, and then tear down and rebuild. So they're just buying land everywhere through Collier, Collier County, west of 41. So, I think the dynamic and I think the skyline of west of 41 is going to change drastically in the next 3 to 5 years.
Yeah,
especially Naples Park. I mean, they resisted gentrification over a decade ago when they wanted to put in sidewalks and create a HOA, and the people in there said, no, we don't want that. And this might thrust them into it because I mean, so many of those homes are just flat and sea level.
Just finished sewer.
They just did,
sewer. They're in the middle of sewer
drainage and all that. Yeah. So, I mean, that area tripled in value over the last 3 years, which is crazy. But and it's kind of settled a little bit back to still at least double in a lot of areas. But
even after the storm. So where do you see the values going now?
I don't see much change. I mean, especially if it's something that's not damaged. I think Will's mortgage rates are a bigger issue than what the storm is. No, it's just the mortgage rates across the country.
Oh, they're his.
Yeah, they're his. He's the one to blame.
He didn't even catch it. No,
I heard it.
So that's what he hears all the time.
I thought we were segueing there.
No, but I think it's more mortgage rates on the things that haven't been damaged, and then things that have been damaged. I think it's going to factor into everything we've touched on already. If it's just land value and where that land is. So, beachfront in Fort Myers was 3 to 4 million before the storm, and that was just dirt. So I don't see that changing.
Right. No, it's still the same. I've looked at Zillow on some of the properties. There's still 3 or 4 million just for land.
There are some northerners who think they're coming down and they're going to pick up bargains.
Yeah.
And we were talking about that earlier. I remember after
I want one of those bargains.
After Charlie hit up in Punta Gorda, and there were so many came down looking to go and buy things cheap there, and the sellers weren't having anything of it. Matter of fact, in that 6-month period after that, I remember reading the statistics that prices have increased 7% there.
Historically speaking, after every major hurricane, the value has actually increased. But
good news.
So inventory levels here though, and this is different than any other time. But in Naples, prior to COVID, we had a little over 6,000 listings total in Naples. All over. In January and February, we were down to 850 total.
Wow.
And now we're at 2,400 roughly. Prior to the storm, we were at 2,200. So, I mean, it's basically a one-off, one-on if they, one comes on, one sells. So there's still things transacting. And in Collier County, we're 57% cash deals still. And Lee County, it's like 40 to 45, which is down a little bit from where it was, but it's just less transactions.
We might see that tick up.
And I think it'll be
County.
Absolutely, yeah. And I think it'll have to be because it won't be habitable and safe and all those things.
So that's one of the main questions that I know that you're getting is where do you foresee value this coming season? You might have had a different if we hadn't gotten hit with Ian, you may have had a different answer because nationwide you're reading in the internet and papers that sellers and buyers are becoming a little bit more even with the sellers. There's a little more equity there, and they're actually allowing inspections now, actually
Right.
allowing mortgage contingencies. But we just lost, I don't know, you tell me, how much inventory did we just lose?
Yeah.
Potential inventory or actual inventory
Depending
for
on
this
the
coming
area,
season.
it's, I mean, and that's, and the people that have filled the gaps as far as, our last two sales in the last 2 weeks were both people that were displaced. So they're both cash deals, and it was both,
Which takes inventory.
which takes inventory. So that's, you have, as insurance stuff shakes out, those
Right.
people that are already here are going to take inventory. They already know the area. They know where they want to be or don't want to be. So
I'll take a small piece of that. I think the one reason that the values actually do go up historically is because insurance dumps in. I mean, 30, 40,
there's an injection of cash.
$50 billion into an environment. Like, you're going to have an increase in value. Like, there's just so
Right.
much cash.
And
in
then
it.
coming out of it, so in 3 years, you have all brand new homes
Right.
that have a certain cost to build.
Right.
Then the value is going to go. So
And
if
you
you
have
look,
brand new renovated homes.
correct. If
now.
you look at 3 to 5 years, then then the values go up. So
Right.
Anybody that's selling now, everyone says, oh, well, the market's going to come down. Well, as a seller, if you bought prior to 2020, 21, you're at 40-50% in equity of what you had anyhow. So
Right.
even if it softens, quote unquote, softens 5 or 10%, you're still at a 40 or 50%
Right.
equity.
Still
Yeah,
okay,
it's still. So, and that's where buyers are getting to play the game a little bit.
They are.
more,
Yeah,
so
we've certainly seen it.
yeah.
I mean, I wrote a,
You're allowed a financing contingency.
I
It's
locked
great.
somebody yesterday. They offered 460 on a 495 ask, and they settled at 475. That would not have happened 8 months ago.
Yeah, it would have been 510.
Correct.
Or 530.
Correct.
Yep.
Yeah.
Yeah, so it is. It's, I mean, which I like. It's back to basics. And some, if you take away Ian, our industries are back to where they were when we got into it, and it's not people that have been in the market, if they just been in 2 years, they don't really know how to negotiate anything,
Right.
because they haven't had to. It's
Right.
pay this price and that's it.
Yep.
So he mentioned interest rates a little bit. Do you want to touch on that? What's going on?
You don't get asked about interest rates right now, do you?
Every single
Tell
day.
them what they want to know.
That and bridge financing, about people want to go, I want to keep what I have and buy this.
Yeah,
But interest rates, we've been getting this question since January about, what's going on with rates and when do you foresee them changing? And the Federal Reserve really is calling the tune on interest rates. Those and the secondary market investors who are buying the mortgage-backed securities, they're the ones that really determine what the rates are. Okay, the Fed doesn't kind of do that. It's the Fed's actions that the investment community is looking at, and as long as inflation continues to be at historic levels, these rates are not going to come down.
They can't.
Okay.
Yeah.
Having said that, and my answer to people has been, and I've crafted this after a while, for the last 3 or 4 months, I've been telling people, when you start to read stories on the internet, in the newspaper, about inflation starting to come down a little bit, that the price of meat has come down a little bit, things like that, when you start to hear that, that's when you can start to believe that some interest rates are going to come down. And a perfect example of this was last Thursday, a CPI report came out, and it was not as good as investors had predicted. And rates dropped below 7%. Not much, but they dropped below 7% on Thursday afternoon and Friday and even Monday. Well, the Federal Reserve did not like that at all. They jumped back in, and one of the governors was saying, wait a second, we're getting ahead of our game here, because they're so afraid that things are going to go right back up, that they're telling everybody, no, we're not there yet. And it's unfortunate, but the Fed has said, we need to make it painful. We need to make it painful with car loans, mortgage loans, everything else, the cost of food. We need to make it painful so that people can't buy as much. And then basic supply and demand, if the demand is not there, then the prices will come down. And it will happen.
You're not making a lot of friends with this.
No, I know that.
But he
But
is
it's so
telling
true,
us,
though.
Yeah, it is
unlike
true.
what
It's
you
so
told us
true.
earlier, it's not his rates.
No, it's not his.
They're not his
rates.
rates, and
No,
it's not his fault.
But it's
But you can't run at 8% inflation.
no,
No, you can't.
But and that's if you believe 8%. But
Very true.
having said that, what is not normal is mortgage 30-year fixed mortgage rates at 3 and 4%.
That's never
You know,
normal.
when I first got into the business in 2002, I asked a bunch of realtors at the time, how high would rates have to be before they would start to affect your ability to market and sell properties? And the average at that point, people were saying, you know what, anything under 7.5%, we're good with that. We're good with that. Now, obviously, over the last 2 decades, the rates after the whole real estate meltdown in 2007 and 8, these rates have been artificially low. The Fed has been buying these rates down. It's funny enough, what
Yeah.
they've done is they've told the Treasury to sell T-bills. They've then taken that money and purchased mortgage-backed securities. Which means that they have supplanted the normal secondary investors who determine where rates are. And finally, they stopped it, and that's how we ended up with these rates where they are. Over the last year, they have increased the federal discount rate, which is really short-term rates. It's the discount rate is the rate of what the Fed lends money to the largest banks in the nation. And it's also the overnight rate between banks, so they can keep their how much they need to go and have in liquidity. But it also affects home equity lines of credit, car loans, student loans, credit cards. It affects all of those things directly because they all are a lot of times dependent upon prime. Mm-hmm. So we've got, unfortunately, a little more pain.
I'll jump in there, and then I think that's part of. And again, if he goes to a renter, and if we go back to like a 203 H and all those programs, but then you have to look at, okay, yeah, if I'm paying 7.5% and I buy a place and looking at numbers, yes, you do have principal going to a mortgage as opposed to paying rent to nothing.
Mm-hmm.
You have a place to live, and if it takes 2 years, so you're looking at the difference of what that is for 2 years of a bigger interest rate to where you could refinance out. So I mean, there's got to be an education on, and that's where like Will and I and mortgage people and real estate professionals work together, is how you can educate buyers on that. And yeah, they can't get approved for the $700,000 home anymore because the interest rates are higher.
Right.
But they can get approved for a 500, and then it becomes a starter home, and you can't
Right.
just jump into that higher mortgage. So there's options out there for sure. I think
There's a term in my industry that has become popular again. It's called date the rate, marry the home.
Yep.
And which literally means find the home you want. And the rates today may be higher than you like, but
You're dating.
we don't expect them to be there, and you'll refinance in a
Exactly.
year or two.
Yeah.
Okay?
Because the
And-
alternative is you wait, and then the rate goes up, and then it makes it even harder to get into that home, or you
Yeah.
get in now, and when it drops, you refinance.
I think we've reached at the height of where the rates are going to
Let's
go.
hope.
Yeah, no, I really think so. At this point, it's just them staying there or eventually lowering. I mean, from my perspective, if we can get rates in the 5s, I think that is what should be normal. I mean, if you go to Europe, they don't have a 30-year fix there. They don't even have 50. Everything over there is arms. A 1 year. Or a lot of them too. The interest rate adjusts every single year
Wow.
because there's no risk that way to the lender.
Right.
If they have a rate for 30 years at 3.5 and the going rate right now is 7.5, well, they're taking a bath.
Right.
So
Yep.
I think there's been a lot of lessons learned. I think everyone would agree on that. My lesson would be to back up my photos moving forward, right? But in more serious, people who did not have home insurance or flood insurance because their home was paid off, do you think we're going to see a shift there? People who have no mortgage, home is paid off, and now getting flood insurance because of what we
I think it
just
just
endured?
depends on costs. it depends on what happens with the cost. Because I mean, flood insurance, that was October of last year, correct? Where it changed?
Yeah, October 21.
Yeah, so that it changed once, and I think people dropped, or decided not to because of cost. It's it's going to come down to cost. And
Well, I think the question on that, because the insurance, marketplace, like I say this, and I don't want to say it in a naive way, but I've seen it really, really bad. It's probably the worst it's ever been right now. I saw it really, really easy in 14, 15, 16. Saw it really bad 10, 11, 12 after Charlie. Not as bad as it is today. And not necessarily because of Ian, more so Irma that then stacked into Ian.
Right.
But, insurance is a necessary thing, right? One, it needs to be competitive. It needs to be competitively available. But without insurance, there's no loans,
correct.
right? So creating a sustainable insurance environment, they have already called special session in December, and there will actually be a meeting. Maybe we'll have a little time on a talk like this about it at some point. We know what are they talking about, what are they debating about, but because insurance, it's required for just about everything. I mean, it really is, and it's good and it's bad that it's that way, but it eliminates a lot of the risk. It shifts all of the risk. Needs to be competitive, but I think my question on that is, and my naivety is that it will. There will always be an insurance marketplace. Like it's
But
possible.
there has to be, yes.
It's possible to have one. It's possible to have a competitive marketplace. Maybe some things we realize this is just not competitive enough, and that's kind of where we are today. But I think, like, my question on the real estate side is like, so if somebody didn't have home insurance, no wind, and they didn't have flood insurance,
And there's a lot of them,
what's going to happen to those?
and those are the ones that are going to liquidate.
Liquidate.
I mean, and most
No,
of
my
most
question.
of those
So
people
that's
are
the bad.
in a position.
That's the bad news because
Right.
it's heartbreaking. But on the other side, do you feel there's an equal buyer coming in, or two, to capture that?
I would have to say that the bulk of those people are the ones that have owned the property forever and have a ton of equity in it.
Okay.
So
it's
the
not. They
answer
didn't want to
is-
sell
The
right
answer
now.
is yes and yes.
They didn't want to sell right now.
Yeah,
It wasn't
now
timing.
now it could, or they have enough equity that they can pull equity even just out of their land and rebuild what they have there, and still, they
Right.
can insure it when it's done. But I think I look at that like at the old Naples market. You have people that have lived there for 40 years. They bought their home for $300,000. It's worth $10 million now.
Right.
It's just one of those cases I see, because realistically, if they didn't have insurance or flood, they don't have a mortgage.
Right.
You have to have those if you have a mortgage. You just said,
Right.
that's fact. So it's going to be someone that has enough equity, I think, that they can rebuild or,
Well, and I think
enough
I think
cash.
Fort Myers Beach is a great example of that, because a lot of properties out there, they've been in the family forever.
Forever.
No flood insurance.
Correct.
Maybe no wind insurance. Maybe liability only.
Right.
And
So then,
And it's
then that's
gone.
going to be, so then that goes to the fact of when, because then that's a complete rebuild. Like they
Right.
can't remodel it because it's not
there's
there.
nothing there.
So that's a different
New
conversation.
code, new code requirements.
And I think that's where Fort Myers Beach is going to change drastically.
Yeah, I think the one place my heart hurts the most is, like, that first or second home buyer,
It's
30s, 40s.
Yes.
But they've bought a $375,000 house, right? In Cape Coral, that's very common.
Very common.
$375,000 house. It's 2,000 square feet, 2-car garage. Maybe a pool, maybe not. And they just got 3 feet of water in their house. It's like those situations, they have insurance because they had a loan.
Right.
Yep.
But still, just
The normal
Just
person,
that
the normal
process.
young professional, or early retiree, and they chose to live on the water, and that's who
Right.
like my heart goes out to as well.
Right.
Like that's the wealthy can rebuild. They're there for a reason. They're in that
Yes,
area.
What are you seeing for the buyers coming down? Is it mainly individual buyers, or is it these investment groups who are looking to go and scoop up a lot?
Depends on the product. So on the condo rebuilds, and like I would imagine, I don't do a lot in Fort
you
Myers
got
Beach.
multiple units. You'd have 10 or 20 units.
So that's going to be
Maybe
your
more.
big funds that are a group of funds that are putting together and buying everything. But on just your normal buyer, it's still an individual. It's still
Is it?
people moving here. It's still, families, so on and so forth. So there's
it-
still a decent number of people that are moving from,
It's the curious part about it, right? So,
Yeah.
So one house sells here. Did we just create an environment? Thank you, Ian. Where two are here to buy. Right. Somebody wants to sell.
You still have people fleeing from high tax states and all those things. I mean, that hasn't changed. So
Right.
those people are still coming.
and if anything, they're looking at Southwest Florida now.
Correct.
Because
Yeah.
we're
And
interesting.
they're still retiring.
They're still retiring.
Yeah.
And Southwest Florida is still Southwest Florida, Sunshine
is.
Yeah.
State. We love it
It
here
is.
for a reason. So
Right.
yeah.
I mean, we're different than just any place.
So the
We are
buyers
always
are-
a destination.
Yeah, the buyers are. My biggest concern, I think, and it's going to take till 2024 for the tourism part to really actually have any say, because I mean, most of Naples Beach is going to be closed for all of 2023.
Right.
So, the good part is there's so many restaurants and things to do. I mean, you don't have the beaches and you don't have the resorts on the beaches, but anything east of 41, I mean, it's like nothing's really
What's going on with the
Happen.
rental market you see this year?
hard because of the people that are displaced and people that may have owned two homes and their one house got damaged and they moved into their other home and kicked the renters out. Like, there's a lot of,
Hard to find
it's
rentals.
hard to find, very hard to find.
What about the prices?
They've been
It's gonna
high
elevate.
and they're even higher. Yeah.
Short term.
Well,
Or
What I love about everyone we've had on this panel today is that you guys love what you do. That is evident. I want to hear a little bit about the companies that you're with. If we can start with you, Will. How long
Sure.
have you been with Summit Mortgage Group?
Summit Mortgage is a direct lender. We're headquartered out of Plymouth, Minnesota, and I've actually been with Summit since 2004 as a senior mortgage loan officer there. In my business, just like yours, if the company you work for is not doing a really good job, there's a lot of movement of loan officers and realtors between companies. But when you find a company that does it right, you stay because it makes your life easier.
And I use Summit as well. I don't actually use Will, but I use Summit and for those reasons.
Yeah.
what's a good number or place to contact you?
You can reach me at 239-272-2241. I also have my own website. It's willdukes.com. Pretty easy.
Yeah.
And
WillDukes.com.
I splurged. I also got williamdukes.com.
Oh,
And I'm on Facebook and LinkedIn also.
okay. Under your name, Will Dukes.
Yeah.
Okay.
So
Perfect. Let's hear from you.
Me?
Yeah.
I work for Compass, so I have a team under Compass. Compass is the largest independent brokerage in the country, so all over basically all major metropolitan areas and expanding as well. So there's 28,000 agents around the country. I've been there since 2018, but licensed since 05. in
Okay.
A couple different places. And then we have a team of 9 that work basically from Marco through Cape Coral, and a few admins and whatnot. So Compass is great because it's countrywide. So today I helped an agent from West Palm connect with an agent in Hawaii,
Nice.
and
Yeah.
one from Chicago to connect with me. And so it's a
It's a
great.
small
You're
network.
able to connect all over. So it's a great company to be with.
Yeah.
it's an interesting thing about our business is that if you live in Indianapolis and you get a phone call from Honolulu, you're not answering it.
Right.
We have to answer every single call because it doesn't. I mean, I got people calling me from Alaska, from Wisconsin. It doesn't make a difference. I can't ignore that.
Right.
they very likely are
I
looking
always
for a
try
loan.
to I always try to block the ones that are selling me some car subscription or something.
I block everything.
Yeah.
Warranty.
Or do not answer. But yeah, no, it's from all over. So it's but yeah.
Best way to contact you?
Phone 239-272-6917, and then
We must have gotten here at the same time.
right, that 272 number, right? So and then email is denny.bowers@compass.com.
Okay. And
Actually, my email is wdukes@summit-mortgage.com.
Okay. We'll be sure to put all of that information on here for all of our viewers. We are CIGFlorida.com. If you guys need any information on Hurricane Ian, what to do, the next steps, we have wonderful resources on there. CIGFlorida.com/hurricane info. Put it to use. Any final words, Brian?
Awesome, guys. And
Yeah.
thank you,
Thanks.
Kombucha.
Yeah, Flying Eagle Kombucha. Thanks for keeping us
Yes.
hydrated
wonder if the-
and our guts healthy.
Will this make a good mixer?
It would actually. Yeah.
I think I'd like it more
Yeah.
with the
So
mixer.
next time on Chapman on Air, we will have a FEMA representative here. So if you guys have questions, save them for that episode. I am excited to come back for that. Yeah, that's a wrap. Chapman on Air.
Okay, thank you.
Thanks.
Thank you guys.
Awesome.
Thank you.